sequence of unexpected events, back-to-back banking failures, a global financial crisis. First Silicon Valley Bank, then Signature Bank, and now Switzerland's second biggest bank, Credit Suisse. Back-to-back banking failures in the last 2 weeks have raised concerns in global financial markets. So what is it really? The start of another banking crisis? What really is happening in the financial markets? Let's take a look. On March 10, the Silicon Valley Bank's collapse was the first domino to fall, followed by New York's Signature Bank on March 12. Credit Suisse has made the headlines this week too, and not for good reasons. The back-to-back banking failures have stoked fears that this is the start of another banking crisis, posing big questions for central banks as they try to fight inflation while ensuring financial stability. It is too early to say at this stage, but there are reasons to be hopeful that a repeat can be avoided. Experts point out 3 reasons. First, banks are in better financial shape than they were in 2008, when many were operating with only small amounts of capital to cover the losses resulting from the meltdown in the US subprime mortgage market. Second, in 2008, the entire global financial system froze up because nobody knew how big the losses were and which banks were most heavily exposed. As yet, there is no sign of that, and banks are forced to report regularly on the quality of their asset portfolios, also undergoing severe stress tests. Finally, central banks such as the Federal Reserve and the European Central Bank have set up lines of credit designed to provide help to banks with cash flow problems. Central banks are in a bind because there is a tension between their 2 main functions. First, to keep inflation low and maintain financial stability. Second, risks of recession have also increased in the past week. Financial markets now assume interest rates will peak sooner and at a lower level than they did before the crisis at SVB blew up, and will be waiting to see how the Fed and the Bank of England respond with the interest rate decisions next week. So is 2008 back to haunt 2023? Only time will tell.